Should you buy Smith & Wesson Brands Inc. ticker symbol SWBI? It's had a crazy couple of days, was $23 a share, lows of 15, and has rebounded pretty strongly and is at about $18.57, which is a 4% increase. What we're going to do is talk about what Smith & Wesson Brands are. We're going to be going through why the stock had this massive drop, and then we're going to be looking at the fundamentals to give my target price and fair value based on discounted free cash flow and the Buffett-Graham intrinsic value, then looking at some technical analysis for you day traders out there. So firstly, what is Smith & Wesson Brands Inc? Well, it is a manufacturer of firearms and ammunition, and they're a company that's been around for 160 years, founded in 1865, and has been a staple in the firearms and ammunition market since then. But why has their stock price went down? Well, they did not beat earnings, and they also have inventory issues here. You can see that their adjusted earnings for the second quarter was $1.13 a share, below the estimates of $1.29. Sales is down from what the analysts were thinking as well, but you can see that they have a lot of inventory, and with this high inventory could make that the price is low because they want to ship off these stocks. So that is why the stock price has gone down. But as you can see, it's had a rebound. But will it get back up to 23? That is the question. So let's have a look at Smith & Wesson Brands. But can we get some likes on the video? You guys got me to 15 last time, so let's go 15 again. Let's see if we can match it. Firstly, has a market cap of $890 million. Share price of $18, 52-week low of 14, 52-week high of $36. So that is a crazy swing. Dividend of 1.19%, and 15th of December is the ex-dividend date. So if you buy today, you will get the dividend that will be paid very soon. So is the P ratio less than the market? Wow, yes it is. 3.4 to 28.5. So that is a massive pass. Don't think I've seen one this low. Next is the revenue increasing. Yes, it has. 636 million to 1 billion. Off to a flying start. Has the profit increased? Yes, it has. 18 million to 280 million. So that is a massive, massive increase, but it's not all good news. I just want to look at the profit numbers here. You can see it was 20 million, 18, minus 64, 250, and the trailing 12 months is 297. So these last 2 years have been pretty good compared to their previous years. So that is one thing that you just want to keep an eye on. Can they maintain it? Probably not, but the profit is going in the right direction, which is the key thing. Next, what are they doing with this profit and the free cash flow? Well, they are buying back their shares, 54 million to 48. So they are rewarding shareholders for holding their stock. Also, which is good, is that they probably think that the stock price is undervalued, because otherwise they would not be buying them back. They probably just keep them flat. Next is the free cash flow increasing. Yes, it is 22.9 million to 267 million. Now, once again, I just want to quickly bring up the free cash flow of the previous years. And you can see here, 42 million, 22 million, 80, 292, 267. So this has jumped up pretty dramatically in the last couple of years. So can it be sustained? That is the question. Or is this just some good years? But you can see that it has a free cash flow ratio of about 3, which is about where the PE ratio is, which is good. That is crazy low, by the way. They're worth 890 million and they're 267 in free cash flow. That is an absolute mental ratio. And the dividend is a 17 million dividend, and with 267 they can easily pay it. And if we just quickly look at that again, even with these previous years, they could still easily pay off their dividend, so it is safe. Next, we want to be having a look at the discounted free cash flow, and you can see here, well, we've got them both here. We've calculated the future free cash flows. I've been conservative. I've even said that they're not going to hit 2020 and 2022, 2020 and 2021, and it's going to sort of go back to the 2018, 2019, and this stock is massively undervalued at this point. $50 a share is what this is saying, currently at 18, so that is a no-brainer buy. Let's just extend this a little bit and kind of take 2021, 2022 more into account, which their numbers have been about 100% of their free cash flow rate compared to their net income, and that would put it up to $97 a share, which is an absolute massive increase once again. So discounted free cash flow loves this stock. And then next we want to look at the Buffett-Graham intrinsic value. You can see here it has earnings per share of $5.43 and an expected growth of 15% a year, which gives a fair value of $183 a share, which is a 900% increase. But a Graham price, which is buy and hold, at 137. So both of these stocks, both of these models are loving this stock. But let's just have a look, and we'll do it live Googling here. I want to see their earnings per share over some time and then put some numbers here. So Smith & Wesson earnings per share, you can't see it, it's on the other screen here. Let me just make this full screen on my side and we can bring it over, why not? So you can see here Smith & Wesson's earnings per share over the last few years. This is $5, $5, $4, $1.72. Overall, let's just say $2 a share. So let's just, if we go back to the previous page, and then if we put in $4 a share, that would still be massively undervalued. Even at $2 a share, which is what it was consistently for quite a few years, that is still a undervalued stock. So the models are really, really liking this stock. Do tip racks agree? Yes, they do. Analysts are saying that this is a buy, $30 average, 38 on the high, 22 on the low. So the analysts are saying that, you know, in a year you will have made money on this stock. So a lot of things are liking this. So what we're going to do now is just look at some of the technicals. First, we'll be looking at the moving averages. So let's just get some moving averages in here. We've got the 50-day. Well, let's just talk it through what I'm doing actually. So we've got in the green, we'll have the 50-day. Then we will add a 100-day in yellow, which will be here. And these are the lines that I like looking at because it gives you kind of a good perspective, and it has consistently proven that these are some of the best moving averages that you'd look at because it kind of has short-term and medium included. So what are we seeing here? Well, what we would previously see is that this price is massively below all the major moving averages, which would be a massive sell, but it has been rebounding, and you can see pretty consistently the 200-day moving average has acted as pretty solid support. Even at the pandemic, it broke below this amount. So the 200-day has been a point of support pretty consistently. So this is way below that. So if you think it's going to go back up, that is a no-brainer buy. With the 200 is currently at $22 a share. So you could go from 18 to 22 pretty quickly. So yeah, I would say basically there was some negative movement, but this 200-day has been consistent, even at the pandemic. And let's just go to the log scale, turn off the log scale. So you can see that even in the pandemic, this has dropped off way below compared to what it has now. So this has been a much more effective for the stock. Now, it did go from, $20 to $40 quite quickly, but I would say that's probably a bit of an outlier. May have messed up these lines a little bit, but you can see that it has consistently acted as a line of support. So let's just get rid of these now, and let's quickly look at the MACD and the RSI. So let me just delete these here. I'm having a bit of trouble deleting them. So what we'll do now is look at the MACD, and we'll look at this on a daily level, and you can see obviously that, yep, negative movement here. You could have caught this a bit earlier when that was the sell signal, when it crossed, and then it crossed again. So very, very bearish on the MACD. These are below zero. The lines are crossing and they're diverging again. But if they are to cross again, that would be the buy signal there. And then finally, we'll look at the RSI. So I'll look at the daily at first, and you can see here massively in the oversold regions. And let's just go to the weekly because I think that does provide show a sort of longer thing. So it's not where it was even in August of 19. And let's see where the pandemic was. God, was it that far away already? There. So it's about similar regions to where it was in the pandemic in terms of being oversold. And the stock had a pretty good run from $8 to $4 and then shot back up. So this stock is definitely in oversold regions, which could constitute a buy. But fundamentally, the stock looks solid, even with its sort of inflated net income and free cash flow. It does look like a buy to me. It does look like a buy to the models, and I think I would agree with them. Right, guys, thanks for watching. Please give a like on the video, give your comments down below, and I'll catch you guys next time.